Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we'll talk about FuelCell Energy Incorporated, traded at Nasdaq, ticker name FCEL. Well, analysis for FCEL was already done around 18th of February, and it's really nice to see that it worked exactly as predicted, as analyzed. So if you would follow at that time, you would be able to make our target profit 10 to 15% here on this leg up, which took place actually by beginning of March. And now we see again the price starts declining. So in general, the major decline or major correction that started from mid of February is still continuing. And now the question is how long it will continue and how we still can trade here. Because what we see now is kind of a third decline channel. And what I mean is, if you look carefully here, so the first decline channel started exactly when we had our correction by beginning of February. Then it was this leg up where you could make a profit. Then there was a second channel. It finished by end of March. Beginning of April it was another leg up, and now we are in the third channel. And what is interesting about it, the period of channels is shortening. You can clearly see it. So every next channel is shorter. The level of decline is still there, the angle of decline, but we are about to pierce the third channel, because here what we see with the shadow of today's candle, we kind of try to pierce it further downwards, which might mean the channel will be broken. There will be so-called accelerative decline, and then it should rebound really strongly, because this is usually what happens. You can also see the volume was slightly increasing today. MACD histogram is tending to go downwards, so it's kind of forming a next negative wave. So it's a very right time to considering this stock to buy, because also you could see RSI being almost at oversold area, which is also very nice. It's creating very positive upwards pressure here. And we don't need to forget that we are in the vicinity of very principal, very strong volatility level at 997, which together with these two levels at 870 and actually at around today's opening also 1140 makes for us 1104 makes for us very nice entry opportunity here, because this is a double support area, also supported by moving average 200 here coming from the bottom. And other two moving averages, 20 and 50, are in decline, but we already had our major magic cross down that happened by mid of March, when moving average 20 hit from top moving average 50. And it means that the major correction already happened. Now we have these waves, so 1, 2, 3 declining channel, and any moment, let's say we could have a significant rebound. So anyway, on those rebounds we can play and we can make the money. So the first one was discussed here, because the next rebounds was here, and now we are just waiting for actually the third one. So with this being said, how to trade, how to buy here. First, of course, the level would be to enter. It's that we said 870 and 1104. So let's write it down here. This would be 870 to 1104. So this is the first channel to buy. Let's make it dark and a bit bigger. So with this one, so the idea to buy here is to have a rebound from this double support channel together with the channel itself and the moving average 200 coming from the bottom. So if this is not happening, if we have more accelerated decline, which is still possible, and if this is going to happen, then of course what might be taking place, we might pierce moving average 200. It's usually a very rare case for these companies, for these also chart positions. But if this is going to happen, it means that we are going for a little bit deeper fast move downwards, forming a deeper MACD wave, but then also the rebounds will be even more significant. So still being within the technical expectation, technical volatilities, we might go then all the way to the level of 507 and actually This one a little bit higher at 640. And with this being said, it's still within the technical fast deceleration. We can buy again, so let's write it down here for us. So this will be 507 and to 640. So within these two levels depicted here, we might still trade technically, and then what we need to do and what we do also at our channel is to take into account possible negative catalysts. Of course, it's already very low that we discussed, but also if you look the price action that sent the price from, let's say, very low levels that we had by November previous year, which was about $2, and when we went all the way to 25, so more than 10 times. Of course, this huge growth also means that now the market is trying to actually understand what happened, and there is a correction. It's still a very nice consolidative correction, I would say, because we are still within the range of normal volatility. We are not really declining. There are reasonable rebounds taking place. Therefore, expected way to trade would be still to have a rebound from the first channel, maybe from the second, but the third one we always discuss just to mitigate risks, if any, coming. And risk mitigation would mean that you just need to keep some funds for very principal levels to buy in from where the price just, simply speaking, physically cannot go even lower. And for this position, it will be between actually this leg that formed by mid of November at 295 and all the way to 380. So let's write it 295, 380. We can make another call out for us. So 295, 380. So with this being said, actually these are the three levels to play here. First two are purely, let's say, technical, and the last one is just risk mitigation, let's say, and kind of just keeping funds just in case, in order to be safe if we have any bad news or bad catalyst coming in. So with this being said, these are three levels, very simple play actually. The most expected one is just a rebound from the first level, but we need to keep those two into account. People always ask us, why do you go that low? Why do you discuss those levels? And what's the basics? Are you randomly choosing them or not? And the answer is simple. Of course, it's not random. It's based on so-called triple analysis or mixed analysis that we do, where we take into account three components. It's a classical chart technical analysis. Second one is taken or using nonlinear averaging down technique based on resist support levels, and that's how we define those lines, those levels. We just look at the principal resist support channels that were formed previously. And of course, the third one is looking at or taking into account possible, let's say, declines due to negative catalysts and mitigating those risks. So this is usually about the third level that we discuss. And with this being said, we just try to keep funds for positive trades. So we do not take losses. We do not cut losses or stop losses. All these techniques we don't use. We just spend a little bit more time, enter slowly, but then exit also with a profit. And in the worst case, the most rare case, just with some maybe minimal loss or a draw. So that's the philosophy behind. And the last one, asking ourselves how to buy here, still true. It's a classical buy, so it's a 5-portion play. For those who are already not first time on this channel, you know what it means. It means that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. You can use another 2 portions if you go for the second channel to buy through slowly. And the last 2 usually you never use, but you just keep them just in case if there is any negative catalyst kicking in. Then while others will be taking losses, you will just buy and prepare for very profitable average down. And speaking of the profit, always we advise to take a profit at 10 to 15% as a normal profit taking, and for fastly moving charts it's 15 to 20. This one is more closer to 15% expectation. Then you can re-enter if you want, or you can check other opportunities as well. There are many videos also at our channel. Even those up to 5 weeks ago uploaded are still fresh, in the sense that if it goes to the second or third level of entry, you could be right in time to buy there and still make your profit. So with this being said, good luck with FuelCell. Also, please don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.